What is good, YouTube? Channel FX back again. Before we get right to this video, I just want to let you all know that what I'm about to teach you today was anticipated in one of my previous videos, which was episode 9, GBPCHF. I anticipated this move, alright? And if you also want to catch next week's move, make sure you watch this video till the end because I'm anticipating that move too. Alright, so make sure you watch this video to the end, and also don't forget to subscribe, man, because I'm putting you on game. Like I always say, man, I'm here to put you on game. So make sure you subscribe, make sure you hit that like button, make sure you drop a comment down below. And if you also want to join my mentorship, my one-on-one mentorship, just DM me on Instagram. Alright, just DM me on Instagram and let me know if you want to be part of my mentorship. You get what I'm saying? So with that being said, let's just get to business. Taking a look at GBPCHF once again. I know by now some of you are guessing GBPCHF is my favorite pair. Actually, it's not. It's not. But we are taking a look at GBPCHF once again. Okay, we are on the H4 time frame. Alright, we are on the H4 time frame. If you want to know how I caught this move right here and this move right here, make sure you check out episode 8 and 9. Yeah, if you want to know how we caught these two moves right here, make sure you check episode 8 and 9. Alright, good. So now, what I'm about to teach you today is how I was able to catch this move right here. You get me? That's why I'm here to teach you how to catch this move right here, or how you could have caught this move right here. Alright? So now, first things first, let's identify the H4's market structure. So looking at the market structure, looking at the inscriptions I've done on the H4, what trend are we in at the moment? We are in an uptrend. How do we know we are in an uptrend? So first of all, price created this lower high right here, came back down and created a lower low, went back up and created a lower high, continued back down and created a lower low, came right here. These are all lower lows, but I just didn't mark them because it wasn't a confirmed lower low, but it's also considered as a lower low, right? So after price created this lower low, what did it do next? It created this higher low. After it created this higher low, what did it do next? Or why is this even considered a higher low? Because this high is higher than that of this high or this high. So this is a higher low. This right here is a higher low. This right here is also a higher low. Okay. After price created this higher low, what did it do next? It went ahead and created a higher high. Why is this a higher high? Because this high broke its previous lower high. Alright, so right here we can say price has changed structure, or there's a shift of structure, or there's a shift in structure. Okay, so now we are no more bearish, we are bullish because price has created what? A higher high. So after price created a higher high, what did we create next? We created what? A higher low. Alright, so those of you who watched episode 9, I anticipated in that episode that price would come back to retest its previous or lower high, which also serves as a resistance zone, which is also in confluence with our Fibonacci, with our 50 and 61 Fibonacci zone or level. That zone or that resistance is in confluence with our Fibonacci zone. So coming into that week, I said all what we will need price to do is to retest that level. And after we retest that level, what do we do next? Or what do we see price do next? You see price bounce off of that level back to the upside. That's what I anticipated in that video. You get me? So now in this video, I'm here to teach you how I was able to catch the continuation of the trend. Which is this move right here. You get me? So now let's go to our H1. And let me teach you all, let me put you on game, let me give you all the source. Let's go to the H1 time frame. So coming down to our H1 time frame, right? Let me zoom out so I can explain better. Alright, cool. So coming down to an H1 time frame, after price broke and created a higher high and it retested our zone or our retracement zone, What did price do next? It bounced off this zone, right? It bounced off the zone and came back to retest it. You could have caught this move. You could have caught this move. I think I even missed this move, right? So when I came back to the chart, I think I was a little bit busy. Alright. So when I came back to the chart, price has already come back to retest it for the second time. Alright. Price has already come back to retest it for the second time, and it was on its way up. You get me? So all what I did was, it looked a little bit messy to me. Looking at all these wicks and all this mess, it looked a little bit messy to me. But from my experience, that's what I said, man. When it comes to forex, do you understand? When it comes to forex, man, forex is a work of art. At times, forex is a work of art. Forex is art. Let me say it that way. Alright, you just need to build that eye for it. I said this in my previous video. You just need to build that eye for it, and to build that eye, it means you have to put in more chart time, man. You have to be on the chart. You have to back test. It comes with back testing. You get me? It comes with seeing your eyes down and back testing, man. That's how come you build that eye. You get me? So from that eye I've built previously by putting the work, all I did was to switch to my line chart. But looking at the line chart, I realized price was creating what? Who can guess what price was creating? Price was creating a bullish pennant chart pattern. That's what price was creating, man. I repeat, price was creating a bullish pennant chart pattern. That was what price was creating. You get me? So now we take our trend line and draw from point A to point B. You get me? We draw from point A to point B. We connect point A, which is this point right here. Point A and point what? Point B. And we take another trend line and connect this point, point A and what? Point B. This point right here. Point A and what? Point B. Alright. So after we figured out our bullish pennant chart pattern, what do we wait for? We wait for a breakout of that chart pattern. We wait for a candlestick breakout of that chart pattern. So now let's switch back to our candlestick chart and find out our breakout. Okay. So looking at it from this angle, what candlestick broke out of the chart pattern? This bullish candlestick. Let me zoom in for you all to see. This bullish candlestick what? Broke out that chart pattern, or this bullish candlestick broke the chart pattern. So after this bullish candlestick broke the chart pattern, what did we do? Look at the volume of that bullish candlestick. It tells you that price was about to rally back to the outside. Let the candlestick communicate with you. Alright, let the candlestick tell you something. Let the candlestick communicate with you. Do you get? Just look at the volume of that candle, man. You know, full volume. Like, bro, you could see that buyers were taking control of the market at that point. Buyers were taking control of the market at that point. So after the closure of this candle, all what I did was to enter my trade after the closure, put my stop loss right below the wick of that candle, right? And my first take profit. Let's draw our Fibonacci. Let's draw our Fibonacci again. Point A to point B, right? So my first take profit was where? My first take profit was where? At a higher high, or 0%. You get me? My first take profit has to be a 1:1. So my first take profit was at where? At a higher high, at the wick of our higher high. Okay, which is also in confluence with our 0% level. Sorry, yeah, which is also in confluence with our 0% level. You get me? And where does our second take profit go? Our second take profit goes to our negative 27% Fibonacci extension level or zone. Alright, that's where we place what? Our second take profit. You get me? And where does our third take profit go? It goes to our negative 1.80 what? 80% Fibonacci extension level. That's where we'll be looking to exit this trade. In case price is able to break above our negative 27% what extension. And after our first take profit is hit, that's where we break what? Even and take what? Partial profit. Do you understand me? That's why we break even and take off partial profit. As simple as that. As simple as that. So this is how to catch this trade. This is the simplest way to catch this trade, man. Bro, I'm giving you all the sauce. I'm putting you on the game. I'm not hiding any secrets. This is all I do. This is all I do on a daily basis. On anytime I sit behind the charts, this is all I do. This is how I look at the market. I try to keep it simple. Man, I have a mantra I always believe in, man. Simplicity brings about consistency. Consistency brings about what? Profitability. Again, when you keep your chart simple, you become consistent. Consistent starts to follow. And when you become consistent, become what? Profitable. That's what I've been doing, man. That's what I've been doing. So now let's go back to the H4 and let me anticipate what I think will happen next week. Going into next week, since you're on an uptrend, going into next week, what I'm expecting price to do is to come back, to retest this higher high, which is also a resistance, as a support. Okay, so going into next week, I'm expecting price to retest, to come back to, probably push a little bit higher and come back to retest a higher high or a resistance as a support and bounce back to the upside. If that doesn't happen, what I'm expecting price to do is to come back into a higher low. All right, is to come back into a higher low, create a double bottom, and what? Bounce back to the upside. That's what I'm expecting next week. In case that doesn't happen, and we break what? And we close below a higher low, and we close below a higher low, what I'm expecting price to extend a little bit down, come back, retest a higher low as a resistance, and continue back down. As simple as that. So if in case price closes below our higher low, it means you are no longer in an uptrend, or we are no longer bullish, we are now bearish. You get me? Only if price closes below, if price is to wick, it's not a break of structure. To me, it's not a break of structure. We need the candlestick to close below a higher low for it to be considered as a change in trend, all right, or change in structure. Do you understand? As simple as that. So going into next week, this is what we'll be expecting price to do. We'll be expecting price to retest. I'm going over for y'all. All right, so going into next week, we'll be expecting price to retest this zone, as a support and bounce back. If that doesn't happen, we'll be expecting price to come back into a higher low and then bounce back to the upside. If that doesn't also happen and price closes below a higher low, all what you need price to do is to retest a higher low as a resistance and what? Keep moving to the downside. As simple as that. This is how I always trade. I always try to keep it simple. You get what I'm saying? I always try to keep it simple, man. So that will be the end of this video. But before you click off this video, make sure to subscribe, make sure to like, make sure to drop a comment down below what topics you want me to tackle. And also share this video with your friends who are also trying to get into this market, or who are also trying to get into this industry. Alright, and also if you want to be part of my one-on-one mentorship, DM me on Instagram. The link is in the description below. Just DM me on Instagram. Alright, I got you covered. You know what I'm saying? So with that being said, see you in the next video. Ciao and FX. Peace out.